Good morning, traders. This is Alla Peters on January 7th. This is market open on Monday, January 7th. Take a look how crucial it is to separate spectacular market conditions at trend inception, where a knowledgeable trader looks to enter long, versus overextended bullish rally that's in brutal correction for the first 30 minutes since the open. Overextended bullish rally is the worst possible place for day trader to be. Market in pain this morning. As we discussed in Mastery course in pre-market review, what is the smartest thing to do? Walk away from the screen. Why? Simple. This is brutal correction when market dancing back and forth in brutal chop. Buyers simply taking a pause since Friday close because bullish rally reached reversal zone. Market sitting at key support on any chart you trade in non-stop chop. Let's convert this chart to 5 so you can see. What a dance. 30 minutes since the open, back and forth. We know extremely well that buyers still firmly in charge as key Fibonacci support respected. We know extremely well that if you choose to touch this, you are trading with less than 20% success rate. Cannot buy or sell this market. Buyers exhausted. Sellers are weak. If I convert this chart to 3, exact same formula remains. Look at this pain. Non-stop back and forth chop. Cannot short into support, cannot buy overextended rally outside of decision point 2. If you do, your success rate less than 20%. Day trading mentality has nothing in common with investors' mentality. Day trader maximum in the markets 20%. Rules are met, take a trade and get out of the markets. This morning, unless price crushing through this support, cannot touch this. What a brutal chop. What a spectacular reminder. Only knowledge of price action and application of Fibonacci will keep you out of trouble. Staring at this or trading this, making your broker very, very happy, but does not grow your account. So if price is crashing through this support, it's a beautiful gift for knowledgeable trader. That's when market will become interesting. And that's what you learn in the course. Buying outside of decision point 2, not an option. Worst place to be, or extended bullish rally, or extended sell-off. Doesn't matter if you take in 1, 2, 3, 4, 5 or 15-minute chart. It's all the same. Do not touch this. Price crashing through, it's a gift. Monitor for long at 2500. Rules are met, take a trade, no matter what you trade. And that's what played out in the markets. When overextended bullish rally reaches reversal zone, expect selling pressure. This is what we're discussing in long-term Fibonacci class. And that's the rules for hourly chart. And if you know how to apply this, you know extremely well this is not the place to buy. And that's the key. Crash and burn through this support S&P. And when you do, only then market will become interesting. This is a dance since the open. Look at this. Ultimate brutal correction. Ultimate reminder. Success formula exactly the same across the board. Knowledge is power. Only when rules are met you can take a trade. Worst place for the day trader to be: overextended bullish rally, overextended sell-off. This morning we're dealing with overextended bullish rally. But if this support is respected, buyers still remain in charge. Ouch, ouch, ouch. Here comes the buyers again. Is that possible? Of course, because the most important rule you learn in foundation or mastery course in a play. Market in pain. What a dance. Back and forth, non-stop, chop. What a spectacular reminder how essential it is to play by the rules and to separate correction from reversal. If buyers stepping in again, market remains in brutal correction since Friday close. Once again, key Fibonacci support keeps you out of trouble. Once again, the most important rule you learn in the course keeps you out of trouble of this brutal open on Monday, where first 30 minutes of the market price danced in brutal correction, non-stop spikes back and forth, which is what price does at least 40% of the time in regular market conditions, 80% of the time in holiday market conditions. This is broker's favorite formation, non-stop chop. When broker printing money, if day trader touches this market. If day trader understands price action, he's not in front of the screen. He's not making his broker happy. He has zero interest wasting his time staring at correction. He knows extremely well buying market this high is extremely dangerous idea. Shorting into support will never work. What a dance. Only if you apply knowledgeable sniper's mentality. Only if rules are met you can take a trade. Until then, do not touch this. Do not waste your time staring at correction. Do not make your broker happy. Walk away from the screen. This exact same correction is what's playing out on Tesla right now. Tesla had been in pain, sitting at key Fibonacci support for the last 3 weeks in correction. Why? Simple. Overextended bullish rally reached Fibonacci reversal zone. Tesla sold off until this support. Do not short. Again, this is Tesla in the month of November, showing you where reversal zone is. This is Tesla at the start of 2018 at key support, do not short. And this is Tesla now. Exact same Fibonacci levels as you see on day trading S&P. Here's Exxon before we closed out for a holiday break. On next Exxon sitting at 76, what do I stay? If this key support is out, Exxon will collapse until next Fibonacci support. Has Exxon done so? Of course. Buyers step in. Price action identical, as on S&P, as on Tesla, as on Exxon this morning. Market and correction across the board. Price reminding you, if you know where key support is, you never short into. Exxon charts on weekly are twins with day trading chart on S&P. It's all the same. So again, anyone surprised what played out on Apple should not be. This is a spectacular reminder. If trading on news, earnings and fundamentals worked, every single person on the planet would be Bill Gates. What did I say many months ago? Spectacular sell-off and a progress. And let me remind you, Apple a year ago. Do you remember what Apple looked like? At the start of 2018, this was Apple at 181. Do you remember what Apple did next? reached next level as expected. After the earnings price bouncing outside of the support until next key Fibonacci target. When Apple reaches reversal zone, this is starting a big problem. Spectacular earnings don't mean a thing. Fibonacci means everything. What do I say? 181 key resistance becomes key support. 181 is out. Apple in free fall. What a spectacular reminder. Only price action in Fibonacci can tell you. Months and years in advance, when reversal zone is reached, get the heck out of position, because price collapses from Fibonacci reversal zone 80+%. This is Apple at the end of the year. What do I say? Apple heading to 140. And eventually you will see 100 in the next few years. Spectacular earnings don't mean a thing. Fibonacci reversal zone means everything. And this is S&P right now. Apple at 140 as expected. Bouncing in correction. But this is S&P right now at reversal zone. Not the place to buy. Just like Apple. And if I convert this chart to 1, you will see how brutal this morning had been. However, if you are a knowledgeable price action trader, you are not surprised. You knew extremely well this is not the place to short, this is not the place to buy, only broker printing money. Just like Apple. This was Apple in brutal correction in the months of September, October, November. When Apple reached reversal zone identified many months in advance. When price is showing very clearly, if this support is out, Apple will go into free fall. Poor Apple now in correction, just like S&P. And that's the power of the method, that you can trade on any instrument you choose, not the place to buy. Just like Apple, on any chart on S&P. No matter what you trade, no matter it's 515, whatever chart you trade, this is the reason market sold off on Friday. This is the reason not to short. It's all the same. If you want to trade pain-free, the best trading days, Tuesday through Thursday. Monday notorious for being corrective. Dangerous, brutal days. Unless we have spectacular major news, that is the only excuse that market behaves. This is a dance since the open. Let's again convert this chart to 5. What a dance. Broker's heaven, day trader's nightmare. If day trader does not understand what correction and bullish trend exhaustion means. Trader who does understand price action, trader who respects most important rule learned in the course, not surprised. This was expected. This was discussed in mastery course well before trading room open, as we discussed with students. Run. Do not waste your time this morning. Expect market in pain. And that's exactly what played out. Back and forth brutal chop. Only if this support is out, market will become interesting. Until then, cannot short or buy this. Brutal pain. Just like Apple, just like Tesla, it's all the same. So if you would like to remove pain from your trading, if you would like to know when to trade, when not to trade, join us in any of the courses. Please review the information on the website for foundations, mastery, group, or private mentoring. Choice is yours what you decide to join. But this is how you will remove pain from your trading, no matter what you trade. When you will know when to be in front of the screen, when to enter the position, and when not to trade. Most important part of the website, what students have to say about the course. And if you have any other questions, do not hesitate to contact me. 925-257-4298 or info@fibinstitute.com.